Barbara Doran's with us. She's a senior portfolio manager with Yorkbridge Wealth Partners. Markets started to go down a bit, maybe because of some of what we heard from Mark Faber. Not saying that that's the overriding reason as to why stocks started to sell off, but he seemed to think that there was going to be a correction fairly early into the new year. Do you share that view?
I do. I have actually been raising cash the last few weeks and taking it from some of my favorite names, the FANG stocks, because I think that, as I've expressed earlier, I think this Trump rally is overdone. It's really on hope and speculation without any real facts, and we don't know what the shape of his policies will be or what can be implemented. So I think what we've seen is a massive chase to get positioned, and I think now it's a low buying week anyway, because it's holidays, and I think it's maybe more to come in January.
You've been raising cash from mostly tech?
Yeah, mostly tech, just because that's the biggest appreciation I've had, which is what we saw when this rally started, the Trump rally. And also, a reminder, in 2015, we had a huge run of the FANG stocks and a lot of big cap technology stocks in December. Then this year, we had a wicked correction. And of course, most of them have recovered, as was pointed out earlier about Netflix. So I think we could be setting up for the same thing to happen in January.
Specifically because you think just things have gotten a little bit out of hand. I mean, the optimism is, you can make the case that it's certainly justified.
Is it justified? I mean, we just have, some policy.
Consumer confidence at a 15-year high. If you think that some regulations are going to go away, if you think that there are going to be corporate tax cuts, that's real fundamental, put your hands around stuff. No?
It is, but I don't think it's going to be as big or as soon as everybody thinks. I think that the tax code is very complicated, and of course they're going to be focusing on that, but I think there's going to be a lot of trade-offs and a lot of horse trading going on. There'll be some simple dereg stuff that happens right away, particularly affects banks and energy, given who's in charge there. But I don't see the GDP growth next year being more than 2 to 2.5%. We are late, aside from Trump, we are very late in the business cycle. As Mark Faber pointed out. I mean, there were a lot of contradictions, Joe. I agree in what he was saying, but it's 8 years into a bull market. I have been long and ready to ride it, but I am now getting very nervous.
But I'm just thinking
for the end of this next year.
Maybe you feel, though, that the business cycle gets elongated, if you will, because of some of these policies, and that the economy is better off than people want to give it credit for.
It could get elongated. See, I think that in a way there's almost a binary outcome here. If Trump were to get everything he wanted, which I don't think he will because of all the deficit hawks we have in Congress, particularly on his own party, you could see an elongation of the cycle. But even if that happens, that means the Fed has to raise rates, we're worried about inflation, and that will actually, ironically, shorten the cycle. So that at the end of next year, and beginning of early 18, we could even be talking recession. I mean, that is the way all business cycles end. So I think it's a very interesting time, and I'm not sure which way it plays out, but I am positioning myself for the start of the year to be ready to move. So there may be some really interesting opportunities.
Not different from some of the stuff we heard from Faber. I think that maybe the economy is going to be a little bit softer later in the year than people think.
Yeah, the only thing that I would disagree with on that call is that usually recessions are caused by something. So it would take more than 3 interest rate hikes, in my opinion, for the Fed to be the cause of a recession. You haven't really seen that overinvestment part of the cycle, which normally ends an economic cycle. I agree with you, it's a long cycle, but as we know, tepid growth along the whole time. So I think maybe that extends it a little further.
Well, it could, because you're right. I mean, you only really see a recession if we are seeing inflation get out of control. The Fed has to hike rates so much that it hurts business activity.
Right.
That doesn't look imminent. But I think by next year, the end of next year, we could be thinking that way, and that's not so far away. It is a discounting mechanism.
Happy New Year.
Happy New Year.
I will see you in 2017. All right, Barbara Doran. It's been a rough year for healthcare biotech.